What's up guys, it's Mateo Hall here, and I want to give you guys a little portfolio breakdown of how I'm investing in what stocks, because I think that this is really fun and really interesting, at least to me anyway, so I thought I'd help share with you guys. Now, just a little disclaimer, I did just start investing about 6 to 7 months ago, because that's when I turned 18, and that's when I was actually able to. So my portfolio isn't really that well diversified, some may argue, and it's not that fat. I have a relatively small accounts with the two brokerages that I deal with, but let's get right into actually looking at what I have in what accounts. We'll start with one of my favorite trading platforms. I would actually say right now it is my favorite. If you click on the link down below, you get a completely free stock with them, and that is Robinhood. So here's my Robinhood account. You can see right here that it is worth $4,660 at the time of the recording. And I only hold 3 different stocks in here. That is VOO, AT&T, and VTI. Looking at the yearly return, I am up 1.39% on this portfolio. You can see right here that I deposited about $4,600 into this account cumulatively since late March, and now I'm up roughly $60 on it. This is really what I was emphasizing, is that I started buying in pretty much the bottom of the market, and I really wish that I had more cash on me to capitalize on it. You can see pretty much during this entire first month, it didn't move more than $1 in these first couple months actually, which I really wish that I just put more money in there. You can see when I really started more heavily investing was late July. And then it went up. That was my peak for a while, but these peaks and trenches just become less and less significant the more money that I put into it. You can see I was up a high of 3%, but right now all of my stocks are down. Let's take a closer look at VOO real quick. So with VOO, I put a total of $1,800 into, my average cost being $310.48, and right now it's up to $318. The reason that I love this so much is because it's an index fund, and when you don't have a lot of money to invest, index funds are the way to go. I personally don't want to look into specific stocks. I'm not trying to pick and choose everything. I'm alright with just holding on to this, it averages a 12%, including inflation, a 10% return on every single stock. So I started trading just VOO in the beginning. I bought and held on to it every single day. You can see my history with it. I'm purchasing a little bit every single day. It depends on what kind of day it is and how much money I feel like investing. On these days right here, I was getting a lot more bang for my buck because it was during that dip. So I was trying to dollar costs down into VOO, and then it started getting a little too expensive, so I put less and less in, and then I realized, you know what, I may as well just be putting my normal $30 in every single time. If we click over to VTI, then you can see it's a very similar situation, about $1,400 invested into that, and an average of $171 into it. I grabbed VTI after VOO. This was my quote-unquote diversifying, just getting 2 different index funds. I figured that putting all my eggs in one would be a bad idea, so I split myself up ever so slightly between the 2 of those, even though they focus largely on the same sectors. It's more of a psychological thing that I don't want to have all my money in there. And a lot of the same here, $30, dollar cost averaging in, back down, and the $70 buy-ins to all of these as well. Now here's the one stock that I actually have bought singly. I've also bought Ford, but I cashed out of that when it was around $6, and I bought in around $4, but I put less than $200 into that. That was over on Webull. I won't even go into that too much. I don't like picking individual stocks. You can see right now my average cost into it was $28.87 with a market value of just over $950. But unfortunately, AT&T is down to $27.36 right now. So I'm net negative on AT&T, and I think that just goes to show that I don't do enough research into what I'm buying. Though I do have a pending dividend coming in for $14 from them pretty soon. If we scroll down to my buying history from them, I'm really trying to dollar cost down from AT&T right now, so that once it comes back up, I can lessen my position on it. Because right now my portfolio is a little bit too heavy in AT&T. Even if I did want to hold them, I don't want to be holding this much. But at the same time, it's at such a relatively high price to where it is right now that I'm trying to average down. So you can see pretty much every single time I'm buying in, it's bringing it down ever so slightly in price. So I'm really hoping that AT&T comes up to like 29, so I'm in the green ever so slightly. Some people have told me to sell AT&T calls, and that's something I'm just not educated in, so I don't want to do it. So here's my Webull account. It's slightly smaller than my Robinhood account. If we look at the year time, I did originally start with Webull, and you can see when my first investment was, if it'll scroll back, that's when I first started investing, right around here with just $200. And all of these jumps were different deposits that I had in there. I have a 5% return on my money year and year on this. Now looking into the stocks that I actually have on it, you can see it's really similar to what I have in Robinhood. I got HPE and JetBlue, as well as SAN that I ended up selling, all as free stocks just for downloading the platform. So you can see, if you click on the link down below, you can get 2 free stocks from Webull if you create an account and deposit $100. You can see that I got JetBlue Airlines and HPE. Valued at $9.45 and $11 respectively. Again, we're really heavy on Vanguard's VOO and AT&T right there. And that's literally it. That is my entire portfolio. You can see I'm really heavy on index funds. I really love Vanguard index funds. I want to talk a lot about that. So you can see the one stock that I actually did end up picking has gone down. And that just goes to show that if you're not willing to put the work into something, then you shouldn't be buying it blindly. I do hope to trim my position on AT&T relatively soon, but that's not the topic of this video. The topic of this video is why you should be investing in index funds. You can see with both of those index funds, dollar costing in at every single point in time, I'm still net positive on them. What an index fund is, for those of you that don't know, it's this agglomeration of multiple stocks all poured into one area that you could buy for slightly cheaper than it would be to buy every single one of those stocks. So the index funds that I have, VTI and VOO, track pretty much the same thing with the mid to large cap sector and the S&P 500. So if you believe that the S&P 500 is going to go up eventually, then buy an S&P 500 index fund. You're going to be averaging, based off the S&P 500 alone, over 9.2%. The particular index funds that I have average closer to 10% after inflation. But that's just their history. Don't take this as financial advice. Do your own research onto what you want to buy and what's best for your situation. These index funds also have a small expense fee just for holding on to them. But this fee is only 0.03%, not 3%, but 0.03% of what you have invested. The dividend that these two index funds have alone is going to cover your expense fee for the entire year with one dividend payment. So that's not too big of a factor for me in this particular case. Now, I subscribe to the philosophy that real estate is how you get rich. So why am I putting all of my money in index funds instead of saving it in a bank account so that I can use it for a down payment? That's because I want my money to be making slightly more than a 0.6% interest rate just sitting in a bank account. So I think that if I could get an extra 2, 3, 4, maybe if I'm lucky, even a 5% increase on all of my stocks, then I could use that money towards even a higher down payment even after I pull it all out. I won't have to pay any fees or taxes on this money because I haven't made that much this year. So I won't have to pay any type of capital gains on that, which is also amazing. So really, I'm using these index funds more as extremely high interest variable savings accounts, if that makes sense, with a little bit of risk to it. Granted, it's also important to diversify. You shouldn't just be invested in index funds or just be invested in real estate. But something that Meet Kevin said is if you focus in and zero in on something that you're really good at, then you can make really good profits while you're still in the wealth building phase in your life. And that's what I'm in. So I'm putting all my money in stocks right now so that I can take it all out and move it into real estate in a year or two. Oh, but Mateo, I hear you say, there's going to be a crash soon and you're going to lose all of your money and you're not going to be able to buy a single article of real estate. What are you going to do? Well, that would suck if there was a crash. But you know what I would do if there was a crash? I would link you to one of the videos down in the description is how to invest in the stock market when a crash happens. That was one of the first videos that I uploaded on my channel. And the gist of it is that I'm going to keep investing when there's a crash. I'm probably going to start buying even more heavily when there's a crash. I don't know how I'm gonna do that when I'm investing $850 every other week right now, because that's pretty much my entire check. But I'll find a way. I'll start working some shifts at DoorDash. I'll start doing anything that's possible to get an extra dollar so I can invest even heavier. The reason I say that is because you need to buy the dip. Everyone says buy the dip, buy the dip, buy the dip. And there's a reason for that. The reason that I do it is because I believe in the US economy and for us to eventually rebound within the next 5 to 10 years. If you look at a graph of the S&P 500, even looking at the 2011 stock market crash, we are up so much money from then. If you invested in the worst possible time, right in the peak before the 2009-2011 crash, you would still be up money. And that's in 10 years. So yeah, maybe it'll push me back another year or so, but honestly though, once I have the income qualifications for the loan, I'll probably be buying my first set of real estate really soon, within the next 1 to 2 years. Guaranteed within the next 3 years, I will have my first piece of real estate and you guys will be one of the first people to know about it. I'd even start vlogging some of my attempts to find a good deal. But that's my portfolio right now. I'm actually really close to a $10,000 net valuation of myself right now, and I'm really excited for that. I have a video planned out for that to kind of celebrate and give you guys a little bit more of a breakdown of where my other money comes from, because that should be fun. But a quick little recap to anyone that watched all the way through for a reminder is buy index funds if you're not willing to do the research on certain stocks. Buy in when the stock market drops even lower, because then you can make even more money when it comes back up to where it was previously. Number 3, focus in your finances on something that you're really good on and you can make a lot more money than just going into something broad. Number 4, remember to leave a like and subscribe on the channel. And lastly, number 5, dollar cost average in every single day. Until next time, guys, remember to check the links down in the description. You can also get your Discover card, get a $50 free credit. Until next time, you continue your financial journey.